Over the past 35 years, rents have been rising faster than inflation. But even as rents reach record levels, they are forecast to keep growing. The latest surveys show a continued mismatch of supply and demand. Demand is rising, but supply isn't. The problem is that there's such a mismatch of supply and demand that rents are increasingly determined by what can people afford to pay. So we have this unwelcome dynamic where even if real wages increase, housing costs also then go up, eating into any gains, leaving workers no better off. In 2000, there were just 2 million households in the private rented sector. Today it is more than double, 4.6 million. Renting is now more common than buying, and the expense is hitting both living standards and economic growth. Now there are some solutions we'll look at later, but it wasn't always like this. After the war, the UK housing stock was broken. Slums, destroyed housing, and many households facing rent equivalent to 40% of income. Yet the post-war period saw something of a housing miracle. House building rates increased radically, more council houses, more quickly built prefab housing, and it helped housing become more affordable. By the 1960s, the UK was building over 400,000 homes a year. Working people now had access to cheaper housing with rents as low as 8% of disposable income, and the private rented sector went into a long decline. The next big change in the housing market was that in the 1970s we saw a surge in home buying. After the war, house price to income ratios were still quite high, around 7. But by the 1970s, smaller, cheaper housing and rising real wages enabled more to be able to buy. Rising home ownership rates were then supercharged by changes to mortgage lending. Once highly regulated and restricted, the liberalisation of mortgages opened up a greater possibility for working people to be able to buy their own home. It was a grim time for private landlords. Rents were relatively low, house prices quite affordable. Many sold up, and in fact, local councils often bought houses sold by private landlords to increase their stock of council housing. The share of private rented housing fell from a peak of 80% in 1920 to just 9% in the early 1980s. However, whilst the housing market was making great progress, the early 1980s saw many things start to go into reverse. Firstly, council house building went into decline. Tenants were allowed to buy their own council home at a discount, but crucially, the funds were not used to put back into building new houses. As house prices soared in the 1980s, the stock of council houses fell, even as the population continued to rise. Housing was largely left to the private sector, except it wasn't really a free market, because extensive planning rules and regulations meant developers struggled to build houses where the demand was greatest. In the early 1980s, regional differences in house prices were really quite small, but as demand rose in prosperous areas, house prices increasingly diverged across the country. Average house prices in the north are now around 160,000. In London, they are over 500,000. And this divergence can be seen in the ratio of house prices to income, reaching a peak of 12 in London, despite much higher salaries. Starting from the early 1990s, there was a boom in the buy-to-let sector, helped by banks offering specific interest-only mortgages and relatively lenient tax and regulations. As house prices grew and the population continued to expand, many found themselves having to move into the private rented sector, not by choice but more by necessity. Between 1980 and 2008, house prices in the UK rose 730%. But the big crash of 2008 saw another major change. Freaked out by a collapsing mortgage market, the government introduced strict new lending regulations which made it much harder to buy. But with interest rates very low and an increase in the money supply, banks were still lending more to buy-to-let investors. The market soared. As a share of the mortgage market, it reached a peak in 2016. House prices were rising faster than inflation and economic growth, and the return from renting was better than keeping your money at very low interest in a bank. The problem is that as the buy-to-let sector boomed, the great home ownership dream of the UK was unwinding. Buy-to-let investors were crowding out working families. Home ownership rates started to fall. And 2016 was something of a turning point. The Conservative government started to change tax breaks for buy-to-let investors and introduced new regulations which increased the cost. At the same time, the UK population was increasing very rapidly, largely due to net migration. But rather than addressing the problem of supply not keeping up with demand, the government mainly focused on a few sticking plaster policies, such as Help to Buy, which gave buyers the ability to borrow even more. It kind of further inflated demand and house prices, but didn't tackle any of the underlying long-term problems. Ironically, the rise in the cost of house prices and rent was leading to higher government spending on housing benefits. If there is one graph that highlights the absurdity of the UK housing market, it is the fact that in the 1970s, the government spent 95% of its housing budget on building new houses and only 5% on benefits. But by 2022, it had gone into reverse, just 12% on building new houses and 27 billion on housing benefits. In fact, the government got so worried about the housing benefit bill, it started to cap it, especially for households with more than 2 children. But taking away housing benefit when rents continue to rise has left many households in dire straits. Because of the housing crisis, the UK has seen a rise in homelessness, especially defined as temporary accommodation. And of course, this is expensive for local councils to deal with. But it was a rise in interest rates in 2022 that's been the final nail in the coffin of buy-to-let. The return from buy-to-let fell dramatically as mortgage costs increased. Even record rent rises have been insufficient to prevent a growing number of landlords planning to leave the sector. Landlords have been further discouraged by new legislation such as Section 21 no-fault evictions and the introduction of new minimum energy efficiency standards by 2030. With only 45% of properties currently meeting those targets, many landlords, who often are an ageing demographic, may prefer to sell up rather than meet the cost of upgrades, estimated at around 20 billion. Landlords selling is not particularly helpful when rental demand keeps rising. On top of that, the recent stamp duty increase for second homes will only discourage either private or corporate landlords buying homes for rent. So this is why the market is working against renters. But what can be done to change the narrative? Can we go back to a time when housing is affordable? Now, the first step the government are taking is trying to build more houses. The target of 1.5 million in the next 5 years is admirable, but unfortunately a little pie in the sky. Despite changes to planning rules, the private sector will struggle to build for 3 main reasons. Firstly, there's a relative shortage of skilled workers. Construction was heavily reliant on EU workers who are now less numerous since Brexit. Secondly, construction costs have risen significantly since COVID, and this has reduced profit margins. And it seems the sector doesn't have much willingness to build cheap prefab homes and high-density flats. Thirdly, private firms are not in the business of meeting government targets. They are in the business of maximising profits. Why have a massive increase in supply if it reduces your profit margins? But even if a lot of new houses are built, it's no magic bullet for reducing prices and rents. Studies suggest a 1% rise in supply may reduce prices in the region of 1 to 1.5%, less than otherwise. It means that if we do build more houses, it will limit the rise in rents and prices, but it's not going to be a massive improvement in affordability. Build to rent is a good idea, but at the current rates, not a game changer. What about rent controls, which have been floated as a solution to rising rents? Well, there are different types of rent controls, but generally it creates winners and losers. Some tenants will get the benefit of lower rent or lower rent increases. But given the already propensity of landlords to leave the market, capping rents will only exacerbate that trend, leading to a smaller supply, which will worsen the problem for people who miss out on getting any rent at all. Sweden has had rent controls for over 100 years. Lucky tenants can get rent-controlled properties where rents are set by collective bargaining and nationwide rules. The only problem is that there is a 9-year waiting list to get onto this subsidised rent accommodation. Those who miss out face an entirely different rental market where prices are much higher. In 2022, Scotland introduced a rent cap to deal with the cost of living crisis, but the Scottish Property Federation claim it led to a loss of $700 million of investment in the private rented sector, and it led to a big jump in rents between contracts. Rent controls have to be combined with increasing the supply of rented properties. In the 1970s, many local councils were taking advantage of low house prices to buy off private landlords who were selling up. This was very effective in boosting council housing, but given today's property prices and the fact that most local councils are on the verge of bankruptcy, it's very difficult to do in any significant numbers. High immigration has definitely exacerbated the rental crisis because recent migrants are much more likely to rent rather than buy, and the scale of new households in recent years is a major factor behind a rise in demand. Promises to reduce immigration have often fallen as flat as promises to build more houses. But if there is a substantial drop in net migration in the coming years, it would give the housing market more breathing room. Although, ironically, if you want to build more houses, you may need more visas for construction workers. A final point is that renters are traditionally less politically influential than homeowners. Government policy in the past 4 decades has often prioritised home ownership, but given the current situation, private renters are a much bigger voting bloc, and without big changes to that sector, they will see their living standards continue to decline or stagnate in the coming years. In the short term, the easiest way to mitigate some of the effects of the rental crisis is increasing housing benefits in line with rental inflation, abolishing the 2-child cap, even if the prospect of the government offering more subsidies to private landlords is not seen as particularly attractive. This is not a great long-term solution because we don't want to have a situation where housing is all about government subsidies to private landlords. There is an alternative, but it will take time. So what does all this mean for people considering whether to rent or buy in 2025? With the prospect of interest rates falling somewhat in 2025, there are reasons to believe that even though house prices are still ridiculously expensive, they may continue to increase in the coming years. This video looks at those prospects.